call it a sanction. I mean, it's the same thing. It's really not a tariff as much as it is a tax on all of these countries. And so you're talking about adding all of the taxes that they're talking about adding. You're talking 120% or more on China alone. Good luck. You know, you're going to end up not only massively increasing the price to the American consumer, but you're going to piss off these countries. And it's just going to incentivize them that much more to quietly continue to do their thing. These countries, as you mentioned, already have a greater portion of human population, of global GDP, a military might, of trade routes, both on land and sea. They refine 100% of all the rare earths. They produce the majority of them, as China is now no longer going to send them out to.
U.S. President-elect Donald Trump has threatened to impose 100% tariffs on the BRICS countries if they proceed with plans to create a common currency to rival the dollar. The former president made this declaration in a social media post on Saturday. The idea that the BRICS countries are trying to move away from the dollar while we stand by and watch is over, Trump wrote. We require a commitment from these countries that they will neither create a new BRICS currency nor back any other currency to replace the mighty US dollar, or they will face 100% tariffs and should expect to say goodbye to selling into the wonderful US economy. They can go find another sucker. One of Trump's less popular campaign promises was the implementation of widespread tariffs, as experts warned that most of the economic burden would ultimately be borne by U.S. consumers. A tariff is a tax imposed on imports entering a country, calculated as a percentage of their value. For instance, a $50,000 car imported into the U.S. with a 25% tariff incurs a $12,500 charge. Tariffs have been central to Donald Trump's economic strategy, which he frames as a way to protect jobs, boost the economy, and raise government revenue. However, economists widely dispute Trump's claim that tariffs primarily burden foreign countries. The tax is paid by U.S. importers, meaning it directly impacts domestic businesses. Studies show much of the cost is eventually passed on to U.S. consumers in the form of higher prices. In a recent interview, popular bullion dealer Andy Schectman discusses the president-elect's plans and what they would mean for gold and silver prices in the short and long term. As we present clips from the interview, be sure to watch until the end, like and share this video, and subscribe to our channel. Don't forget to hit the notification bell for updates on more valuable content. Thanks for watching, and enjoy the video.
So, I don't know if he's trying to incentivize this, to incentivize a reset. Some people think that. I think he's overplaying his hand. First of all, you're going to significantly impact trade volume between the U.S. and the BRICS countries. And most of these nations, or many of them, are huge importers of goods to the U.S. So the tariffs, first and foremost, are going to increase prices for the American consumer. Not to mention disrupting the global supply chains, but to the American consumer, as these tariffs will not be paid by those manufacturers or those importers or exporters rather, but they will be paid by the end user, as the producers will up the cost. That's first and foremost. It's going to strengthen the alliance. I think that they'll push these members closer together in an effort to double down, if you will, to establish their financial system that will be less reliant on the dollar and the treasury. I think that that's a given. You already saw China today just suspend all shipments of some rare earth metals. I was just reading it, and hell, if I can even remember what the names of them were. Let me see if I have. They're all like end in idiom. These are things that are used in radars and in batteries, and the rare earths. I don't even want to look for it, but they're already pushing back. I think that what we will witness is just an all-out reduction in demand for dollars and for treasuries. The dollar's role as the world reserve currency is unlikely to face any immediate threats, but these tariffs will lead to retaliatory measures by the BRICS nations. They will escalate into broader trade conflicts, if you will, and it's going to strain relations between the United States and harm U.S. exporters. So, normally you implement a tariff to protect your manufacturing base, but we don't have much of a manufacturing base. We've offshored it all. So all we're really doing is adding a tax, if you will, or a higher price inflation on the end user, the consumer. This is not the way that you come in and mend fences by saying you must use our currency. One that, by the way, is another $750 million given to the Ukraine today. We're destroying the value of the dollar. Our treasury market has been unstable. And, he is one who's advocating for lower interest rates, a weaker dollar. That's all, diminishing the purchasing power of the dollar. And so to make people take this, to force them to take a currency that has, not done much to preserve purchasing power and has been weaponized and is continuing to be weaponized, I think is a silly mistake, and probably will have really negative implications moving down the road. We'll see if he even gets them, or take it all the way to the nth degree. Is he trying to do the best that he can to create a controlled reset? That's way out there, and I'm not saying that that's going to happen. But look, if you wanted to get people confident in the system again and mend fences, this is not the way to do it.
Some Trump allies believe his tariff announcements are more of a negotiation strategy than firm commitments. Republican Senator Ted Cruz highlighted this perspective, noting the importance of leverage. On Face the Nation, Cruz remarked, "You look at the threat of tariffs against Mexico and Canada. It immediately has produced action." Similarly, Trump's pick for Treasury Secretary, Scott Bessent, suggested that the tariff threats align with Trump's broader negotiating tactics. In an interview with the Financial Times, Bessent said, "My general view is that at the end of the day, he's a free trader." He further explained Trump's approach as escalate to de-escalate, implying that aggressive tariff rhetoric is used to force concessions before scaling back. However, experts are worried that these are not just mere threats and would have dire consequences for the U.S. economy. While speaking with Russian publication TASS, French economist Jacques Sapir criticized Trump's plans to impose 100% tariffs on BRICS nations, highlighting the potential repercussions for the U.S. economy. Sapir emphasized the critical role of BRICS countries in supplying essential goods to the U.S., including agricultural fertilizers, consumer electronics, and medicines. Donald Trump's threats against countries that stop using the dollar are quite ridiculous, Sapir remarked, warning that such tariffs would significantly impact American consumers. He added, "The countries against which these threats are directed, namely the BRICS, provide the bulk of American imports, underscoring the economic interdependence that makes such measures risky." Andy is just as worried and emphasizes that these threats will not stop the BRICS countries from proceeding.
Call it a sanction. I mean, it's the same thing. It's really not a tariff as much as it is a tax on all of these countries. And so, when you're talking about adding all of the taxes that they're talking about adding, you're talking 120% or more on China alone. Well, good luck. You're going to end up not only massively increasing the price to the American consumer, but you're going to piss off these countries, and it's just going to incentivize them that much more to quietly continue to do their thing. And look, people always said the West wouldn't go down easy. I think when you put Trump into the administration, you could put an exclamation point on that. But in the end, these countries, as you mentioned, already have a greater portion of human population, of global GDP, a military might, of trade routes, both on land and sea. They refine 100% of all the rare earths. They produce the majority of them, as China is now no longer going to send them out to export them all to the United States. As this is beginning of retaliation. These are very interesting, challenging times, and Trump is basically saying to all these countries, if you leave us, well, you're gonna have 100% tariff when you can't trade in the United States. Well, I guess at some point these countries will have to decide what's more relevant and what's more important. But it's certainly not a good way, I think, to come into office and with an attempt to mend fences. And in fact, he's taken the other position and saying, we've been so weak for so long, I'm done doing that. This is the way it is. If you don't like it, tough. Well, I guess we'll see how that plays out, but probably wouldn't be my first choice.
Do you see that affecting the gold and silver price?
Well, I do believe that the Fed wants to let gold go higher. I think they won't stand in the way of it. I don't know that they're going to do what Cynthia Loomis, the senator from Wyoming, talks about, immediately revaluing it. But I do think that it would behoove them to, and it would enhance the balance sheet of the country, to let gold go higher. Right now, the trend is risk on. Right now, it's risk on trades in equities and in cryptos. There's a very strong link between these stable coins like XRP and XRC, I think it is, that are massively tied to the bond market. Right now, as much of the world is selling our treasuries, these stable coins like Tether and XRC, I think, it's part of Goldman Sachs. These balance sheets that back these stable coins that are being issued are 85% U.S. treasuries or thereabouts. And so people trying to leave the legacy system are only supporting it by going this route. It's one of the things that if you want to take a contrarian viewpoint, all you hear is crypto, 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 Bitcoin, Bitcoin, Bitcoin. But what are the big money? What are they buying? They're buying gold. They're buying farmland. They're buying physical, tangible assets. And what are the central banks doing? They're buying gold and silver. We don't see them buying crypto. Some people think it's a rug pull. I'm not going that far, but what I will say is that, I think you kind of tune out the noise and look what the big money is doing. And the big money, most of it around the globe, is still buying commodities. Now, with that being said, I wouldn't have a problem sitting back and letting things kind of unfold. Ultimately, gold and silver go much, much, much higher in what will be a very inflationary situation, a weaker dollar, lower interest rates, stimulus, if you will, a reduction of taxes. This is all going to create, I think, a commodity boom.
Gold prices lowered slightly to begin the week due to a stronger U.S. dollar and Trump's promise to implement 100% tariffs on the BRICS nations if they proceed with plans to create a common gold-backed currency to rival the dollar. However, experts are certain that the decline will be shallow and short-lived as geopolitical risks remain elevated, driving continued demand for safe haven assets like gold and silver. Andy believes all the factors driving the world towards a widespread commodity boom are still in play, and Trump's threats will greatly strengthen the resolve of countries like China and Russia rather than dissuade them. Brazilian officials have downplayed Trump's proposed 100% tariffs on BRICS countries, dismissing them as rhetoric rather than actionable policies. The Brazilian Foreign Ministry pointed to Trump's previous unfulfilled tariff threats against China, Mexico, and Canada during his first term, highlighting a pattern of provocative yet unexecuted announcements. Officials under President Luiz Inácio Lula da Silva described the remarks as provocations, expressing doubt about their practicality given global economic interdependencies. Diplomats urged Trump to consider the realities of the international economy, particularly as he warned of consequences for nations reducing reliance on the U.S. dollar in trade. Brazil, which has pushed for a BRICS common currency to reduce dollar dependence, views the proposed tariffs as unlikely to materialize, seeing them instead as part of Trump's negotiation tactics rather than a realistic policy agenda. Please share your thoughts on Andy Schectman's interview in the comments section below. Don't forget to like this video, subscribe to our channel, and turn on the notification bell so you don't miss any of our future updates. Thanks for watching, and we'll see you in the next one.